So we have this box that's formed, and at this point, what I'm waiting for is an arrow, either up or down. These other orders that you see here, this was from an overnight trade, and I'm not going to talk about this, only to say that, so here was my short position, and then I exited not too long ago. What I wanted to just mention about that is that these two short trades here, created by the boxes, kept me in that trade. And so what a lot of traders will do that already have their own specific strategies, they will use the box to assist in other trades that they're making. The market is kind of sideways. Volume is really low right now. So I want to do this because, one, I want to show you how to do a box trade, and number two, how to use it during sideways markets, because it can be really effective. So the top of the box here is at 37.5, and now we have our blue arrow. Now typically you're going to just go in at market, but because we're sideways, sometimes what I like to do is just hit a limit order. So I've got 3 here, and so I've got an order sitting here right at the top of the box. This is one way to do it, but like I said, usually most traders that use this that trade this are going to just get in that market. We've already hit the first profit level, and we're approaching the second. But because the volume's low, a lot of times what will happen is these price levels will act as support and resistance. And so what I'm anticipating is that price will come back down, reacting off of these price levels as resistance. And because volume's really low, a lot of times that will happen. So if the market just takes off, then I'll just cancel my order and I missed out on this trade. But when the market is slow like this, and we just don't have a lot of volume, I typically don't like to just jump in, because you almost always have this pullback. So this could take a couple minutes, it could take a lot longer, and like I said, it might not even happen. So what I'll do is we'll just sit here, and hopefully this will come back around. So there was 15 minutes that went by.
Order filled.
So now we're in this trade. I want to show you what I do with my profit levels and how I manage my stop. So as you can see, I got filled at the limit order that I had originally placed, and then the first thing I move is my stop. So what I like to do is put it about 1 tick below the box, and then what I'm going to do is put my first, so I'm in with 3, I'm going to put my first exit with 2 contracts at the second profit level, and I'm actually going to move this one up to the 1, 2, 3, 4th, the 4th profit level. Later on I'll explain why I did that. At this point it doesn't really matter, because I want to just talk about what's happening here. So when we're in consolidation, remember, as I mentioned, these price levels, these dotted lines, are going to react pretty accurately as support and resistance. And just real quick, I'm in the Mountain Time Zone, Denver. So right now it's 11:05 my time. And if we go over back to charts, we can see it's 11:05 down here. So when you're doing a trade like this, number one, the box is pretty straightforward. You don't really need all this extra information, but I get a lot of questions from traders that they run different strategies, and when is the best time to trade, and what do you do in this circumstance? And so again, as I mentioned in the beginning, I want to show 2 things. Number one, how to trade the box. This is a little bit different than I normally talk about because of how I did my entry. But as I mentioned before, when the market's slow like this, then if I'm going to make a trade, I'm going to be a little bit more picky, because the market is slow. A lot of times you can get better fill prices than when it's fast. So I went ahead and paused it because the market just wasn't moving. And as you can see, it hit my profit target twice, but it didn't fill me. So as you can see, these act very accurately as support and resistance. In this case, resistance, as price is trying to push past these price levels. I'm looking at between 2140 and 2141 as a pretty major resistance level to break through, which is why I have my target, which is one contract, up at the second to last price level. And so that's there in anticipation that we can break that. I don't know if we will. Market's kind of dead right now. We're going to have to get a pretty good push up in order for that to happen.
Target filled.
Okay, so finally, it took like 100 years. So at this point, what I do is I leave everything alone. Unless, something happens, I'm not going to change anything because, again, I'm trading off of the box. The box, basically says, hey, there's a trade opportunity forming. The arrow tells me what direction, and then it's up to me where to place my exits. And in this example, I took 2 off at the second exit, and then my third one, which is 1 remaining, up at the second to last, which is the 4th dotted line that you see up there. So again, at this point, I leave everything alone. If we start to come back down, I'm still going to leave it. If we break to the upside further, then what I'm going to do is move my stop loss up. It doesn't make any sense to risk any more than I have to. Even though I just have 1 contract left, it doesn't make any sense to put any more risk out there. I mean, at this point, the market's just flat. It's just staying here, and it's having a hard time deciding a direction. So I'm going to let this sit for a while longer, and then we'll see what happens. I may end up pausing it again. So while we're sitting here, 11:42, you can see, and back to the time and date, 11:42. I know there's a lot of people that say, you did that during the replay. No, this is live. So even here, we're just not moving very much. So I'm going to pause this again, and then we'll come back, and hopefully we can see some good action. But at least this gives you a really good idea on what you can do, even during when the market's dead. I typically don't like to trade during this time, but this is a really good example to show the support and resistance qualities of these price levels and how to execute this type of trade effectively. So this trade just ended up being way too long. So I'll just point out what happened here. Obviously, we did not break to the levels that I was hoping we would. Those highs that I paused it before were pretty much all we got, and it did not break. It didn't close above the 41 level that I was looking for, so which is fine, because then just make adjustments. And so what I ended up doing, as you can see here, is I moved my stop on that last contract up to this red line, just kind of hoping it would still head up, but obviously we didn't. So I took a 3-tick loss on that 1 contract, and I took a 2-point gain, so 16 ticks, combined between the two on the first exit. So I netted 13 ticks off that trade. But it's a really good example to show really how easy it is to use this tool. So again, the box tells us that a trade opportunity is forming, and then what we do is we wait for the arrow. In this case, we had a blue arrow for up. It tells us that the probability is up. So then we buy. In this trade that I did, I used a limit order. When the market's moving, better, then market orders are generally better, because you'll miss a lot of trades if you place limits. And then you just determine your exit. And I showed you how I did mine. Obviously, we didn't get to as high as I wanted to, but that's what the market gave us. And so we just made those adjustments, still came out ahead, and that's all really that matters. So I just wanted to show you something real quick. I get a lot of emails asking basically along the lines of, I have this strategy I run. It works pretty well, and I'd like to use the box with this strategy. How can I integrate that? Something along those lines. So throughout this video, and I apologize, it's longer than I had initially expected, but I kept referencing this area between 2140 and 2141. I didn't necessarily want to bring this up, but I am bringing it up because I get this question a lot. And so what I like to do is I like to use other things as well. The box by itself is perfect. I mean, you can have a lot of fun with it. It's a very profitable indicator. What I'm going to show you here, it's not available yet, but it's something that I developed specifically for futures markets. and it basically analyzes overnight data. And so this price level here, I just call it one price because it's just one price. This is what I was looking for it to break. And so my thought process behind this trade that you just watched was that if we can hold above this level, then we will continue higher. But it never happened. We kept hitting, through this range here, we kept hitting this price, and it didn't qualify. And so once price came back down here was when, and I didn't have the recorder on, but as you can see here, I moved my stop here, and it obviously stopped me out. I was hoping that this would just hold here and it would continue back up. Obviously, it didn't happen. So this way, what I was able to do is minimize my risk, a 3-tick loss on one contract and 16-tick gain on, between the other two. And so, anyways, I just wanted to show you that so that, if you're already running strategies that you like, or you're doing something or using other price levels or whatever it is, or another indicator that you like using, there's a lot of ways to integrate this box tool in with whatever else that you do, because as you can see, what it does is it creates a lot of confluency. So if you have any questions about this trade or anything I've shown you here, feel free to just respond to the email, and good luck trading.